Hello and welcome to Commodity Champions, your weekly dose of what's brewing in the commodity space. I'm Manisha Gupta. Let's talk about the announcement made by the government this week. The cabinet announced the minimum support price for 6 Rabi crops or winter crops. The prices on an average have been hiked by 6%, with range being 2% to 21%. Wheat's MSP has been hiked to 1840 rupees per quintal, which is an increase of 6.1% from the previous year's prices. Meanwhile, MSP for important crops like gram and mustard has been increased by 5%. Remember, the Modi government had promised a 50% margin for crops in its budget this year. While the Kharif crops were trading much below that margin, Rabi crops were reasonably above 50%. So the Kharif actually saw a larger increase of 15% overall. This was announced, remember, in the month of July. While we wait the outcome of MSP hike in Kharif, the impact of hike in Rabi will be seen only in the next year's fiscal deficit. Joining us now to talk about all of this and take this discussion forward is Avik Saha. He's national convener of the Jai Kisan Andolan. Also joining us is Siraj Hussain, who's ex-Agri Secretary. Mr. Saha, let me begin with you first. And, one of the demands, of course, has been of the high remuneration, which we have seen gone through for Kharif and for Rabi as well. With the Kharif season already underway, we are in October right now. The arrivals will begin very soon. It really is about implementation. I mean, the government officials themselves and many state governments are yet to come online, get ready for that. What would you say about the preparedness of this all?
Implementation on ground is not happening. There is a common misunderstanding that the government has to purchase everything, which should not be the case. I've been repeatedly saying so. Government needs to play the role of regulator in the market, and the government is not doing that. I don't know whose interest the government wants to serve. If the markets are properly regulated, if MSP is taken as a serious legal right and a serious legal obligation of the government, things would be much better. These announcements are mere political grandstanding. They don't mean anything to the farmer. No farmer is accepting in patches. It will be incorrect to say no, but accepting in politically important patches and politically important states, it's not being implemented. It's more in default. This year, 2018, is seen 3 to 4 major farmer protests across country, and the latest one as well. After 15, perhaps the 7 demands were met. The others have still are still impending there. When it comes to farmers, really, how would you look back at 2018, and with what the government has done, how satisfied are you? It's a crisis created by the government. I don't exactly understand what's the political subscript of this, but on the surface it looks like this government hates farmers and is happy if farmers hate them. I'm sorry, this arithmetic about 7 demands out of 11 or 13 it has been created to confuse. You see, there are 2 primary demands which almost all farmers' organizations have been making. One is, give us profitable remunerative price. And after you do that, please clean us of our debts once. Everything else, input costs, the 7 demands that you say have been met, diesel prices, electricity, all these are input costs. And of course, these are going up. These are further impacting profitability. Farming is a losing proposition, and now it's a killing proposition. So these are important, but the government is not looking at the core issues, the structural issues, and it's allowing agitations to build up and then swooping down, talking about settlements, signing papers. And as we've seen in the Mumbai and in several other cases, it just is an exchange of paper and document and hopes and promises. Nothing really happens.
Mr. Hussain,
in the coming months, we are going to see much more. Let me just finish that, please. In the coming couple of months, till December, January, we are going to see a series of farmers' protests reaching Delhi, and this problem is going to grow in size as I see it.
Mr. Saha, that point is well taken. Getting in Mr. Hussain into the conversation as well. Mr. Hussain, you heard Mr. Saha saying that the farming is a losing and now perhaps a killing proposition, and there are concerns. Perhaps core and structural issues need to be tackled into agriculture first. Just getting back to that question, which I was asking Avik as well. How would you look at 2018? Because we've seen 3 to 4 major protests here. It is an election year. Perhaps the government is making the right noises in right direction, but it really is about the implementation part, because we haven't seen much of a progress come in that sense.
My sense is that the central government would push the state governments very hard to implement the 3 schemes under ASHA in right earnest. There is not much the government can do to increase the prices in mandis for various kharif crops. Even if the government wants it, it cannot do it. However, the government can persuade the state governments, and I foresee that the new agriculture secretary has taken over on 1st of October. He is a very dynamic, very pushing officer, and I see that I can see that he will talk very vigorously with the state governments to ensure that the pulses and other coarse grain crops, etc., are procured at MSP. However, there are limits to what the government can do, and in times like this, when the global prices are very low, the window available to the government for very major structural reforms is very limited.
Also, Mr. Hussain, my point really is about the kind of dependence that we have farming in this country, nearly 50%, which is much lower than 2 to 3% of what US does. What really is desirable here? I mean, do we continue to have that population depending on agriculture, or do you think, as you guys have said, both of you, that more core and structural changes need to be made here? Apart from in farming, do you think it also is about dependence on this sector?
No, it is very much so. There are too many people depending on agriculture, and during the peak, time of economic growth between 2004 and 2011, we did see a lot of rural labor getting jobs in construction sector and other sectors. So, the reason for current distress is also that the growth in other sectors of economy where the excess labor from rural areas could be employed has stagnated. Construction, for example, as a result of which we see that people who are earning from other sectors of economy are not earning as much. So surely we need to migrate people, but you see it is easier said than done. Even for educated people, for university graduates, we find that enough jobs are not being created. Even if GDP is growing, the jobs are not getting created because of new technology needing lesser number of people, etc. So there are a whole lot of economic issues which need to be tackled, and I hope that the government think tank, the Prime Minister's Economic Advisory Council, Niti Aayog, and other organizations which are interested with this task of suggesting to the government what should be the roadmap, would be working on it, so that when the new government takes over, some clear ideas are available on which action can be initiated.
Just coming back to the agriculture part yet again, and even as we have seen, we are looking at a record high crop. Avik, how are you looking at the farmers making use of that really? Because even as the kharif has started coming in right now, we have seen much of that produced below MSP. In some cases in Maharashtra, some crops are as low as 20 to 30% below MSP as well. Would you say that, while of course the MSP has been announced, but with the delayed impact of that, at least the current month is something that we might see yet again in distress as far as the prices go?
You see, perhaps the solution is
I can foresee that
making
in Maharashtra
food and growing of food.
Avik, yeah. The question was to Avik, Mr. Hussain. Yeah.
The solution perhaps lies in making food, growing and food, the center and the focus of the economy, which for 70 years it has gone out of style. You see, the flavor of the season is that farmers need help. The truth is the reverse, actually. we can't live without farmers, we can't live without food. I was curious. I have deep respect for my fellow panelist, but I was curious. If the new government is the old government, then how things will change, I don't know. If the new government is some other new government, there were two prescriptions he suggested. One is a very dynamic secretary, and the second was the states purchasing crops under PM Asha. Now, we have to understand that the states are not rolling in money. They are poorer than the central government. From where? And the central government has promised only 25% purchase. So the balance 75% procurement has to be done by the state. Is that even feasible? And the Central Agricultural Secretary has very limited scope. I mean, I'm sure the people before him were equally dynamic. You just can't keep shifting the goalpost because fundamentally you're not looking at the policy crisis. What should we do with agriculture and food? I look back and see that food was our greatest strength. It no more is. And we've actually wasted away that advantage we had and moved away into other things which we think look modern. But are not core to the economy. So maybe somebody needs to look at that closely and understand how the whole country can change. One point that comes to my mind is food processing has just remained a process on paper. So that is one area which can absorb people, which can engage the economy and take it forward.
Mr. Hussain, coming to you, and one, would you want to reply to what Avik really mentioned? And the other is, what really are the solutions going forward then? I mean, we keep discussing about funds, the kind of resources and the limited scope that the governments have. So what really is a realistic way of moving forward from here now that the season is upon us?
Actually, it is nobody's claim that the governments will procure the entire production, and I would be happy if even 25% could be procured by the governments under the price support scheme. I do not see that happening in all the states. Even 25% will not be procured by many states. Now, as for the solutions, the solutions in agriculture are not very easy, and they require a lot of political consensus. For example, recently Dr. Gulati and others have written a book in which it has been documented that compared to subsidies, investment give you a higher return. Now the question is how to reduce the subsidies on fertilizer, on free electricity, on free water, and channelize those subsidies as investment into the agriculture sector. For example, completing the irrigation projects, which are very capital intensive, or investing in value chains. For example, when Green Revolution in Punjab and Western UP, Haryana came, the government invested a lot of money in setting up of mandis, setting up of warehouses. The Food Corporation of India was set up around the same time. We have not seen similar investment in creation of value chains for perishable commodities. In fact, I was secretary of the Ministry of Food Processing. Our entire budget was just about 700 crores. And last year we wrote an article in which we had found that the government of Madhya Pradesh had incurred a loss of some 780 crores in procurement of onion, while its budget for food processing was just not even 15 crores. So there is a total mismatch between investment in food processing and what we end up spending on subsidies. So Mr. Saha is very correct. A lot of thinking is required, but I do not see that coming before the elections because these are not very easy decisions.
My final question really, and this is to you, Avik. So, with the Kharif season upon us, how do you see the next couple of months? The Rabi sowing, of course, would begin in November, around that time. But for the next 1 month, with the arrivals coming in, what is the feedback? What is the mood on ground from farmers?
Very, very negative, I'm sorry to say. The Kharif procurements have really not raised any hope, and the Rabi announcement inspires no confidence. And, again, that shifting of goalpost business, farmers now understand, what is C2 and what is their actual input cost. Farmers notoriously never calculated the cost. Everything that they got from the mandi, they took it as profit. But now, thanks to 1 year of constant engagement by almost all agencies, farmers understand what they are not getting. So there is a lot of resentment on the ground, and I seriously hope that this government or the opposition or whoever engages with this topic seriously and just does not take it as some kind of political grandstanding, rhetoric, and, sloganeering. This is a serious issue. It involves 60% of the population, directly or indirectly. Some say 70. But whatever be the number, it's huge. And if this is not receiving attention of policy and of politicians, say what should receive attention? So bad situation on ground. Parties need to strap up and look into this problem as a core priority problem. The election should be fought on this and this issue alone.
Point taken, gentlemen. We'll let you go at that. Thank you so much for joining us. So those are some serious concerns and some solutions as well coming in from our experts when it comes to the agriculture sector there. It is going to be about the centre and the state really pulling up their socks and looking at investments rather than subsidies. I mean, that really seems to be the key word, and that, of course, has to be done faster. Some more key measures need to be taken in that space. Welcome back. You're watching Commodity Champions. We did speak about the MSP hike, but let us now do a roundup of what happened in the crude oil market sector this week. The oil prices have been steady around the 4-year highs. However, the outlook for crude is uncertain after the Iran sanctions. Remember, the sanctions will take effect on November 4th, and the experts have warned about low spare capacity leading to fund houses building long positions. When it comes to the near-term forecast, most people like Australia and New Zealand banking group Mercuria, Trafigura have forecasted the crude prices reaching the triple-digit levels. While the Bank of America Merrill Lynch expects the crude oil prices to hover around $90 per barrel. To speak more about this and more, Azleen Ahmad of Argus Media now joins us. Azleen, hi. It has been a very, very volatile week for the crude oil prices. How have you read the forecast on crude, calling it $90 or even $100 per barrel in the next 3 to 5 months?
I think that the way things are going right now, with Brent already moving up to 84, 86, there is that possibility of prices moving closer towards $90. I'm not sure whether it's going to hit $90, but I think that over the next month, we have to be prepared that we probably see Brent prices closer to the high 80s than the low 80s. But we have not predicted $100 oil for this year. I think that our expectations is that there should be fundamentally, the market should be fairly balanced for the year. So I think that we're not expecting $100 oil at least for this year. And we have to also see that there will be some cap in demand as the trade wars have not really disappeared yet.
Okay. Azleen, the markets did take some solace in this week from Saudi Arabia and Russia, saying that they would increase supplies to meet the gap created by Iran. But that would lead to the global spare capacity then at record lows. However, the fundamentals are still strong. How would you read into all of that contradicting statements coming in?
Well, I think that there's no doubt that the prices are going to remain firm. I don't think we're going to see prices drop below $80. And as you say, Saudi Arabia and Russia have expressed their, they have said that they are willing to increase production, and they can increase production if the market needs it. But as you say, that means that the spare capacity or the cushion will be a lot thinner, and that will make the market a lot more nervous about unexpected supply disruptions, let's say in potentially in Africa or in Venezuela or in other countries. And I think that is going to keep prices firm. I think that, well, the Saudi oil minister has said that he thinks that fundamentals are actually quite healthy. And we saw in the last week that US crude stocks actually rose 8 million barrels. So I think that right now, maybe the market is not super tight, but I think that there is a lot of nervousness, and that is factoring into the prices, and will probably continue to keep prices on the boil at least over the next month, as the market ponders what the final US decision on Iran exports will be, whether they really want Iran to totally cut exports, or whether they will be a bit more flexible and at the last minute maybe give a little bit of exemptions for some countries to allow them to import limited volumes of Iran. So I think that right now it's a little bit, everyone's watching what the US final decision will be regarding Iran.
Well, yes, the next 1 month, of course, will be very volatile. But do you see this uncertainty ending by 4th of November, or would you see it continue by the end of the year? Because you again have an OPEC meeting in the month of December.
I think that for now, I think we're going to see a very volatile market over the next few weeks. I mean, we already saw that over the last few days, prices go up $1, come down $2. So I think that we're going to continue to see that. And every time there's a headline news, something about a supply increase or something about uncertainty, it's just going to go. It's going to be very driven by headline news, I think, over the next week and over the next few weeks. And I think we are going to see a very volatile market throughout October. I think there's no doubt about that, because I think the market's trying to find some sort of, I guess, a price balance and trying to just figure out what the demand, what actual demand supply will be come November.
Well, that's about November, Azleen. But what's your sense on the OPEC meeting in December? Do you see the cooperation, the output cut agreement continue into 2019?
I think that there is a great possibility that the producers, the OPEC and non-OPEC producers, well, the non-OPEC producers led by Russia, that there seems to be a desire to work together beyond just the agreement that they've had over the last year. So I think that we could see some sort of, I'm not sure what they're going to plan, but I think there could be some sort of further cooperation between the non-OPEC producers and at least Russia and some of the major non-OPEC producers. So it may not be an actual deal, but I think that there is a good desire for them to actually cooperate so that the market does not go out of whack in terms of the supply, and that they're not competing with each other, and that they could at least maintain some sort of balance so that oil prices don't crash or rise to a level that will actually erode demand. So I think if come December, we could see some sort of cooperation between at least Russia and Saudi Arabia and the other OPEC producers.
All right, Azleen, we hear you. So prices are not going to go below 80, but they can go to 90. 100, of course, is a tough chance, as you've said. But with that, it's a wrap up on this edition of Commodity Champions. Thank you for watching. But before you go, take a look at what other experts had to say about the crude oil prices levels going ahead.
$90, I think, is very much within the realm of possibility. A key reason here is we are seeing continued concern that there may not be sufficient supply in the pipeline once the Iranian sanctions start biting. I think OPEC does have significant capacity for the time being.
As I mentioned, the volatility will still be there, but fundamentals point to a kind of stable market. So in our view, I think probably $90 probably we don't see that. Maybe in early 80s, maybe around $80 mark is what we see in the next month. But longer term, I think we still see more stable crude prices.